Okay, so this one is the wide range bar, you can see. Okay, wide range. Now this one represents, this one is a bullish bar, wide range bullish bar. This one is a wide range bearish bar. Now, if I have to, just go for the low range bar. Similarly, we can draw the low range bar. All right. So low range bar would be here. I mean, it's exactly similar like the wide range bar, but the range of the bar, range, as I told you, is the distance between high and low. This is high, this is low. This is high, this is low. This is high, this is low. And this one here, when you see this line here, it's this one, this horizontal line attached to this, this vertical bar is known as a close. Okay. Are you getting a point?
Yep.
Okay, right. So the low range bar obviously would be having a smaller range. Okay, a smaller range. Now you compare this range with this range. This one is low range bar, this one is wide range bar. I think you got an idea. Whenever I say, sorry, this one I made it incorrect. Should be here. Okay. So let's draw the low range bar here. Okay, so this one is low range bar. Now one point to note here is that range is also known as spread. Okay, range is also known as spread. So whenever I just consider range of spread is high minus low, or in simple words, you can also say difference between high and low of the bar. Okay.
Okay.
Distance, or you can simply call it as length of the bar. Length of the bar. I mean, all means same, right? Okay. So now we will go towards the next one, interpret that. Now you know what now we have several categories of bullish bars and bearish bars. Okay, we have bullish HLC bar and bearish HLC bar. Okay, the first category would be, first of all, is the inside bar. Okay, no, we'll call it inside bar. Okay. Now, what is the inside bar? Inside bar simply means, for example, you have the bar here. Okay, the bullish bar. All right, the bullish bar here, and this one, within this bar, you can see there is another bearish bar. Or the other category would be like this. You have another, sorry, can you hear me?
Yep.
Okay. So this one is another category here. All right, this is again a bullish bar. And then within this bar, we have another one, which is another bullish bar, followed by this one. Okay, so these both are inside bars. Okay, inside bar, what I typically mean, this is actually an inside bar. Okay. This one is an inside bar. This one is an inside bar. All right, so we call this one as an inside bar. Okay, and this one as inside bar. Now I will tell you what does inside bar mean. But this one here, as you see the wide range bar covering, engulfing the inside bar is known as actually the mother bar. All right, a very simple term, mother bar. And similarly, this one is also known as a mother bar. Got it?
Yeah.
Okay, all right. So what actually inside bar means, that the range, the inside bar, range of inside bar will lie within the range of the mother bar. This is definition. I think you can now understand what do I mean to say. Okay. Now, what is the range? Now, if you see correctly, if you see, all right, let's suppose this is the range here, the range of the mother bar, all right? Now, the range of this bar, range of this inside bar is covered within the, it lie within the range of the mother bar. So that's why it's known as inside bar, this one. All right?
Yep.
Can you see? This is the range of
Yep.
the mother bar, and this is the range of the, so range of the inside bar is covered within the range of this. So what exactly actually means? For example, if you are just like, I will tell you how it relates to the volume later on as we progress through this training. Okay. Now this one here. Now inside bars, narrow range bars. Now we have wide range bars. I've already told you narrow range bars. I've already told you what is narrow range bar. Now we have two categories of narrow range bar. One is N47 and NR4 and NR7. Okay, so NR7 and NR4. So did you get an idea about inside bar?
Got it.
Okay, all right. So yeah, now we will go for this one. All right. Now we will see another category which is known as. So we have covered inside bar. We have narrow range. We have covered narrow range bar, wide range bar, and then side bar. Now the fourth one is the outside bar. Okay, the outside bar. Each of these bar will have a significance. Okay. Outside bar is, there are two kinds of outside bar. One is the one is the bullish one. The bullish one is known as actually the top reversal. Okay. And the bearish one is known as, the bearish outside bar is known as, sorry, the bullish one. The bullish one will be known as bottom reversal. Okay. Got it?
All right.
All right. So for example, if we have a bullish bar here, okay, we have a small now as we are going down. Example, we have a several. Oh, sorry. We have a several bearish bar. This is first bearish bar. Okay. Now we have another bearish bar. This one, and then we have the third bearish bar like this. All right. And then we have the fourth bar here like this. So we are actually in a bearish trend. Okay. Now we see the bar. Now you see the bullish bar, which is the bottom reversal. The bottom reversal will look like this. It will go up here. Okay.
Okay.
So what does it mean? It will now, if you imagine this, if you just have a look over this, okay, the bottom reversal or the bearish outside bar will breach. Okay. So I will write down the definition first. Will breach the low of the previous bearish bar and close above or at the high of the previous bar. Okay, this is a definition. The bottom reversal or the outside reversal, we also call it as the bullish bottom reversal. Okay, the bottom reversal will breach the low. You can see this is a low of the last bar. It will breach. It breaches the low and then it immediately reverses. Can you see? Just focus over here. This bar. This bar breaches the low of this bar. Can you see?
Yep.
And then after it breaches, the buyers came in at this level, at the low, and then it immediately reversed. All right. So this one
Okay.
is known as the bottom reversal. And you can see that the high, the close of this one, the close of this bar must close at least. Okay, it should close at or above. It should close. Okay, the bottom will reach the high and close above or at the high of the previous bar. It should at the high or above the high of the previous bar. You understand that? In this way, in this scenario, it closed. It can also close right over here as well. It can also close right over here as well. Or it can close at here as well. But it should close at the high or above the high of the previous bar. You understand?
Yeah.
Okay, this is known as the bottom reversal. All right, now we will go for the top reversal. Top reversal is similarly same. Okay, it is quite similar. All right, so I will go for the top reversal. This one is actually known as the bottom reversal. All right, now I will go for the top reversal. The top reversal is very similar. You have the bullish bars, series of bullish bars. Okay, then you have another bullish bar. Okay, then you have another bullish bar. Okay, then you have another bullish bar. So you have a series 4, 5, 6. It doesn't matter. I mean, you will have a series of bullish bars in an uptrend. All right, and then the next bar it will come. Right, it will go above and close like this. So it's same. So what happened? Similar like it. So the high of this one. This was the high. This was the last high of the previous bullish bar. Okay. So if I have to define the top reversal, hello, can you hear me? Hello.
Yeah.
Okay. Okay.
Yeah.
Top
Yeah.
reversal
I'm
will,
listening.
okay. Top reversal will breach the high of the previous bullish bar and close below or at the low of the previous bullish bar. Okay, very simple. Top reversal will breach the high of the previous bar and close below. So it will breach the high of the previous bullish bar, and then it will immediately reverse and close below the low. Okay, below the low, at or below the low. It will close at or below the low, at the low of the previous, below or at the low of the previous bullish bar. Understand?
Yep, got it.
Okay, now if I have to see the chart here, right? Now how we will see the chart? You can see. Can you define me? Can you tell me any kind of reversal? This bottom reversal. Show you. Yeah, this one. You see, it breaches below the low of the previous bar, and then it closes above. Can you see?
Mm.
Yeah. So this one is bottom reversal. All right. Now this one here as well. It breaches below the low of this one, very slightly below, and then closed high above this. This one is bottom reversal. All right. And let's see the top reversal. Top reversal, top reversal. Can you identify top reversal here? Yeah, this one here. A top reversal. See, it goes above the high. It breaches above the high of this bar, and then it closes below. Can you see? Hello, can you see?
Yes, yes.
Yeah. So this is what? This is actually our top reversal. So now you have an idea about top reversal and bottom reversal already. We'll go for another one. All right. Now we have another variation of this outside bar, or means top reversal and bottom reversal. We call it as 2-bar top reversal or 2-bar top reversal. All right. So let's go here. 2-bar top reversal. Now, as you can see, it says about 2-bar top reversal. Okay, and this is 2-bar bottom reversal. It is same as in other terms, like in candlestick terms, we call it as bearish. I think you know about engulfing pattern. Do you know about engulfing pattern? Hello?
Yep.
Yeah. Now, 2-bar top reversal. For example, if we have this one here. Okay, we have this one, bullish bar. Okay. And then we have another one, bullish bar. All right. And then we have third one here. So we are predominantly in an uptrend. Okay. And then we have a top reversal, 2-bar bottom reversal, which will be same like this one. This one. This one is 2-bar top reversal. Now, what is the difference between 2-bar top reversal and 1-bar reversal?
This one is just 2-bar.
This is 2-bar. No, this one, these two, 1 and 2. Okay. The difference is it does not need to breach the high. It does not need to breach the last high. Understand?
Okay.
Okay. Top reversal or 1-bar top reversal needs to breach the high and then reverse down. But this one does not need to, but it must close below the low of this. This is very important. In other words, okay, we also call it as engulfing. I think you know about engulfing.
Yeah.
Okay. Okay. So this is just like a engulfing candle. All right. Okay. So this one is engulfing, and similarly, we also have this one for the bearish one. One, two, and then we have a bullish bar here, which you like this. This one is 2-bar top reversal. All right, it does not need to breach the high, breach the low of the previous bar. All right, but it must close above the high of the previous bar. Okay, understand? And this is also this is known as, let's suppose, bearish engulfing. In candlestick, we call it as bearish engulfing. This one is bullish engulfing. Okay. All right. So I will show you here on my chart. Okay. Now here, very simple. They are very easy to rectify. This one here. This one was started within the range of this bar. It started within the range of and then closed below. This one is 2-bar top reversal. Okay. This one here as well. It started within the range of this bar and then closed below. This one is 2-bar top reversal. This one as well. This one is 1-bar top reversal or top reversal. Okay. This one is 2-bar top reversal. There are many examples. This one is 2-bar top reversal. This one is 1-bar top reversal. Oh, sorry, 1-bar bottom reversal. It closed below and then, can you see?
Yeah.
Yeah. This one is, this one is actually an inside bar. Can you see? This one is inside bar. Can you see? It slides in. But if it closed, if it would close below the low of this bar like this, then we will call it as 2-bar bottom reverse, 2-bar top reverse. Understand?
Right.
Right now it is inside bar. Easy. This one is inside bar. You can see this bar is inside bar. It is within the range of this last previous bar. This one is within the range. Okay. But if this inside bar, if inside bar close above this one, we call it as 2-bar top reverse. Oh, sorry, 2-bar bottom reverse. Understand?
Yeah.
This is the difference. Now this one was an inside bar because it is within the range. It was an inside bar, but what happened? It closed below the low of this. So this is what? This is 2 bar top reversal. Understand? Okay.
Understand.
Now we have another one. Now we have another. Now we are clear about this, right? So we will go for the another one. This one we call it as key reversal. Key reversal. Okay. The key reversal or top key reversal, and this one is bottom key reversal. All right.
Okay.
Now, what does what does key reversal means? I will tell you. The key reversal is just like we'll have this 1 bar. Let's suppose. Okay. Okay, we have this 1 bar here. All right. And then you will see the bullish bar. It goes below and then open. This is key reversal. This one is key reversal. Okay, the bottom key reversal. And the top one will be from the upside. The bottom one will be from downside. Now, what does it happen? Why we call it as a key reversal? Because it breaches below. You can see this bar breaches below the low of the previous bar and then close above. Now, it does not have, if it close above the high of this one or this one, we will call it as top reversal. But if it close in the mid or something like this, okay, we will call it as a key reversal. Understand?
Yep.
The idea is same, right? All of this is showing us the reversal in the trend, whether it's top reversal or whether it's key reversal or whether it's a 2 bar reversal. All right. Similarly, if we have, let's suppose, bullish bar, okay, and then we have the bearish bar here. This one like this. Now this one is actually a key reversal. Why? As I told you, it breaches the low of the high of the last bar and then closed below, and it closed in the middle of the range. The close of this, if you notice this close, if you notice this close, it was in the middle of this range of this. It was in the middle of the range of this bar, the previous bar, right? If this close was right over here at this point, we will call it as top reversal. Okay, but if it was in the middle like this, we will call it as a key reversal. Easy.
All right.
Okay, so we will identify some charts of key reversal. Now, key reversals are very easy to identify. Okay, you will see in the chart here, key reversal. Okay, you can see this one, key reversal, closes below and then within the range. Key reversal, can you see? Key reversal, this one, key reversal. And then this one here as well, key reversal. Now, you can see that after every key reversal, what happens? The key reversal, they're testing, the market is tested, and then it goes up. Okay, this is a basic method. This is the basic way the market moves. This one, what is this one? 2 bar reversal. 2 bar reversal. Right? 1 bar, 2 bar. It closes in the range of this. Okay, it does not need to breach the low. So this is 2 bar reversal. So 2 bar bottom reversal. Understand? This one here is key reversal. This one is key reversal. It goes below. You see? It goes below the range of this, and then it reverses, it goes above and close in the mid of this part. Key reversal. All right. This one is also key reversal, but we don't have to trade every key reversal. We have to see the context. It's very important. All right. So I'm just telling you how to identify key reversal. This is key reversal. key reversal. Key reversal. I think you can see the key reversal already. You can easily identify on chart. So the one thing you have to know about the key reversal. It's very important. Okay, when you say key, the close of the bar should be at the top, not on the mid. If it's on the mid, it's not a key reversal. It should be on the top. It should be on the bottom, low, okay, near the low.
Okay.
Okay, for example, it goes up. If it closes like this on the top, it's a key reversal. If it rejects this area, but if it closes in the middle, it's not a key reversal. All right. So the same thing applies for the 2-bar top reversal, 2-bar bottom reversal. Got it? And then we have the top reversal and bottom reversal. All of the things. The close should be the close of the bar should be at the low or high, wherever it's reversing from. Understand?
Okay.
This is a very main point. Example, this one. Let's suppose this one here. This one is a key reversal. Yes, this is a key reversal. It closes, it breaches the high of this one and then close below. Now, if you go to the candles, it will look like it. The key reversal will actually look like this, either a pin bar on the candle. So it will look like two types. For example, if it's a key reversal like this one, you have a key reversal like this one, okay, like this one. Sorry. This is a key reversal. All right. If we convert it into the candle, it will look like this. Pin bar. Okay. Or the key reversal may also look like this. Okay. This is key reversal. It may also look like this. This is a bearish bar, red bar. So this is a top tail bar, either a top tail bar or a pin bar. Understand?
All right.
Okay. For example, if I have to show you here. Now, this one is a key reversal. You can see this one is actually a key reversal. This one is key reversal. Now, if I go to the bar, you can see there's a key reversal. But if I switch to this one, it will look like a pin bar. Okay. This one is a key reversal. All right. Is it a key reversal? This one. Answer is no. Why it's not a key reversal? Because the close of this one, you can see the close of this bar, close. It does not close below the high of this bar. So it's not a key reversal. Understand?
Yeah.
Yeah. So now you may call it as a pin bar, but see this pin bar fails. Now, if you're trading this pin bar, you will definitely you will sell, and then the market will reverse because it was actually not a key reverse. All right, but this one is a key reversal. You can see this one is exactly the key reversal. Now, if I just call it, this one is a key reversal because this one, you see the previous bar high. Now this is the previous bar high. The price goes above and close below the previous bar high. The price goes above, but it does not close below the previous bar. So this is not a key reversal. Both of them are the pin bars. You can see this is pin bar, but this pin bar did not work, and this pin bar caused a reversal, a huge reversal. Can you see the difference?
Yeah.
Yeah. This one here, this is 2-bar. This is 2-bar. This is 2-bar top reversal. 2-bar bottom reversal. On here you can see, and this 2-bar bottom reversal. And there is a huge volume you can see associated with it, and then after that there is a huge rally up. Here as well, you see, we have this is what? This is top reversal. This one, a top reversal. This one. After this top reversal, what happens? It opens here, and then it closes below the low of this. So this is top reversal. Or you can also call it as a 2-bar bottom top reversal. Okay, I told you the difference between the 2-bar top reversal and the top reversal. What is the difference? The difference is that the top reversal is exactly like the key reversal. Okay, for example, this is top reversal. This is not the top reversal. This is 2-bar top reversal because the price does not go up and rejects an high. It immediately falls at the high. So this is what? This is 2 bar top reversal. All right. Now, if you
Right.
go here, you will see it as an engulfing bar. If you know about engulfing candlestick pattern, you will see it as engulfing candlestick. Understand? Now this one is a key reversal or not? Let's see. Yes, this one is a key reversal. All right, and what happened? This key reversal, the price is at a very high volume, the price tested it, and then the price goes up. Let's see. Understand? Okay, so we are done with the key reversal in all of this now. Now we have 2 kinds of inside bar, which is NR4 and NR narrow range. Okay, now you have an idea about narrow range bar and this one, right? Now we will discuss about. Let's go for this one. This one is done. This one is done. Okay. Now we'll go for determine understanding the swing highs and swing lows. Okay. The swing highs and swing lows is very simple. If you want to understand the swing highs and swing lows, it's just like okay, the swing high is actually like this. The mark goes up and then this one down. This is swing high. This one is swing low. Can you see?
Yeah.
Because the price goes up, it swings at this point and then it reverses temporarily. The price goes down, it swings at this point and then reverses temporarily. All right. So it's just a temporary reversal, a short-term reversal. So if you want to define this, how we can define a swing high, a very, very simple terms in terms of bars. This is, let's suppose, we have bullish bar, this one. All right. And then we have this one, another bullish bar. Okay, it closes at the middle or something like this. All right. And then we have a bearish bar. Now, this is, can you see? Now, if you see the high of this bar, high, this is previous high, and this is next high, and H. So this is high, this is previous high, this next high. Can you see? Can you see the pattern? Yeah. The high of the swing. Now, this is actually known as a swing point. The swing high. The swing high will have the high which is higher than now this high of this bar. If you can see the high of this bar, this one is actually, if you extend it like this, is higher than this high and this high. Can you see this high and this high? But this is, and after this there's a temporary reversion and it falls down. So this is swing high. Similarly, we have a swing low. It's exactly same like this. Okay, so we have here this one, and then we have a bullish bar. This is swing low. This one over here is known as swing low. All right. This is swing low, this is swing high. It's same like this. The high of the previous bar, you can see. The low of this bar, this is the low of this bar, and you see this low. So the low of this bar, low, is higher than, is lower than the previous low, then the low of the previous bar, and the low of the next bar. Okay, so if I have to define swing low is a bar that has the low lower than the low of previous bar and the low of the next bar. Understand? Any questions so far?
Not yet.
Okay. Similarly, swing high is a bar that has the high higher than the high of the previous bar and the high of the next bar. This one, swing high, swing low. Okay.
Yep.
So if I have
Yep.
to do, if I have to see on the chart here, very easy. This is swing high clearly. You see, because the high of this is high. If you see this high, it's this high. You see this high, it's higher than this high. See, and see, this is swing high because the price goes up, it forms a V shape reverse. Okay. Similarly, the price goes
Yeah.
up, it forms a V shape reverse. Okay. You see, the price goes up,
Okay.
forms a V shape and reverse. This is swing high. The price goes up, forms a V shape reverse. The price goes up, forms a V shape reverse. So now once we see this swing high, swing high, swing high, okay. Now, now this is a swing low, you can see. Swing low. Swing low. Can you see? Swing low. And then swing low. Why this is not a swing low? This one.
Not a V shape.
Hmm?
It's not a V shape.
Yeah, because the low of this bar was was lower than the previous bar, but it was not lower than the next bar. Now, do you understand why this key reversal? This is actually a key reversal, right? This is key reversal. Why this key reversal does not work? Did not work out. Now I tell you the key reversal. Now I will tell you the very, very important point which you have to keep in mind. Okay. Key reversal or top reversal or top or bottom reversal. Okay. Reversal or top 2 bar, top or bottom reversal. Okay. Must occur at swing high or swing low in order to reverse the market. Remember that. This is very important point. Okay.
Okay.
Key reversal, top or bottom reversal or 2 bar top or bottom reversal must occur at swing high or swing low in order to reverse the market. It's very important. Now here it will reverse the market. It can reverse the market. Here this has a potential to reverse the market. This one does not. This is not a swing point. This one it reversed. All right. Now of course, why we are now why this? Okay. This is only first of the. This is one criteria. We have other criteria as well. For example, we have to check the volume. We have to check the volume at the swing point. We also need to check the background and the context. All right. The support and resistance line. Only then we will make our sell and buy decision. But this is one of the criteria. Okay. Swing the key reversal, top reversal, bottom reversal, whatever bars we have, right? They all should occur in the, I mean, they should occur at the swing low and at swing high to cause a reversal. For example, this is swing low. Okay, this is swing low. You can see this is low. It's lower than this one. This is swing low, and this one actually reverses the market. Am I right? Can you see?
Yep.
Okay, all right. Now we will go for the uptrend and downtrend. It's very easy to identify uptrend and downtrend. Okay. Now you have an idea about this one. The uptrend is very simple. You will see the uptrend is just like this one. We have the price is going high and then reverse. Okay. Okay. All right. Now what we see here, this one is showing low. All right. We call it as SSL, which is showing low. Okay. This one is showing high. All right. And this one is higher swing low. Can you see higher swing low, HSL? This one is higher swing high, SHS. Can you see in an uptrend?
Yeah.
In an uptrend, price will make higher swing low and higher swing high. Okay, very easy. Similarly, in a downtrend, I think I told you before as well, price will make lower swing low and lower swing high. All right. Now, if it's a downtrend, you can see like this. If it's a downtrend, so what happens? This is high. Okay, this is high, swing high. This is swing low. This is lower swing high. Okay, this one is lower swing low. Okay, lower swing high. Can you see the pattern? So in a downtrend, the price will make lower swing low and lower swing high. In an uptrend, the price will make higher swing low and higher swing high. All right. Any confusion?
All right.
Okay.
No.
Can you see here? This one here, the price is making higher swing high and higher swing low. Higher swing high, higher swing low. Higher swing high, higher swing low. Higher swing high, higher swing low. All right. Now, if I have to mark the swing high and swing lows, I can just mark it like this. Swing high, you can see easily. Swing high, swing high. Now you can see each of the swing high. All of these things are getting higher and higher. Similarly, we have swing low. We have swing low. We have swing low. So each of the swing high, swing low are getting lower, higher and higher, right? Similarly, in a downtrend, we have higher the swing high. This is lower swing high. This is swing low. Okay, this is lower swing low. This is lower swing high. This is lower swing low. Can you see? This is downtrend. Understand?
Yeah.
Okay. Similarly, if we want to see a range here, a ranging market, we also call it as a sideways market. Now, this one is range. Now I will draw a range here. Range. Okay. This is range. So here we have, this one is swing high, swing high, swing high. This one is swing low, swing low, swing low, swing low. Okay. So we have in a range, we call it as a range, or we also call it as sideways market, or we can also call it as consolidation, whatever you like it. Okay.
Okay. Okay.
These are the different names of the same thing. Consolidation. We have equal swing highs and equal swing lows. All right. The market is not doing anything. We call it as the market is in equilibrium. Equilibrium means when the swing highs and swing lows are equal. Okay, got it?
Yeah.
Okay, now if you want to see on the screen here, the swing high, swing low, this one, if you just draw, this is a range. Okay, because the swing high now, actually the swing is actually drawn like this. Okay? We have this equal swing high and equal swing low. All right, this is a range. Now we don't have to be accurate. Okay, this is not like you will say, okay, this is a higher high, this is a higher low. This is actually a range because we have roughly equal swing lows and swing highs. All right, but if we have a pattern like this, where we have a sharp declining of swing highs and swing lows, we call it as a downtrend, and then we have a sharp incline like this, uptrend. This one is range. Got it?
Okay.
Now this is what? This is actually a range. Okay, the price have almost equal swing highs and equal swing lows. Can you see? This one is a range. The price has almost equal swing highs and equal swing lows. Not like this. This is uptrend, downtrend. This is markdown, markup, or a downtrend, markdown, range, uptrend, or markup, and then range and then downtrend. Can you see?
All right.
All right. So whenever we are drawing, now let's go for, okay. We have to understand, determine the market structure, uptrend via distribution, swing high, swing low. Okay, right? So we have already determined this one as well. Okay, now uptrend is also known as markup, and downtrend is also known as markdown. Okay, trading range, as I told you, is also known as consolidation or sideways market. Now, identify impulse and corrective waves for an uptrend. Now, this is also important, uptrend. So we will cover until this one, 1, 2, 3, 4, 5. Tomorrow we will cover the rest of the points, right? So this is the last one, impulse and corrective waves, and then this one, identify volatile and non-volatile trends. Okay, so let me go see. Okay, now this is, let's suppose this is a downtrend here. This is downtrend. Now examine this one. This one is downtrend. This whole market, right? This is downtrend actually. Swing high, swing low, swing high, swing low. So we have, if you see, I call it as a swing high because if you see this one here, this one here, this one, this one. All right. So this is swing high, lower swing high, swing low, lower swing low. So this is downtrend. Am I right?
Okay.
Okay. Within downtrend. Okay. Now impulse wave is a wave that moves in the direction of the trend. Impulse wave move in the direction of the trend. Okay. Corrective wave move against the direction of the trend. Okay, remember that. So this is first point. Impulse wave move in the direction of the trend. Now this is impulse wave because it is a downtrend. So this is impulse wave. This one, corrective wave. This one, impulse wave. Can you see? This one is impulse. Do you understand or not? Hello?
I think so.
Okay, corrective. Now corrective wave is the wave that moves against the direction of a trend. Now, since we know that this is a downtrend, so that direction of the downtrend is downward. So impulse wave is the wave which moves in the direction of the downtrend. Impulse wave, corrective wave. Impulse wave, this one is impulse wave. Understand?
Okay.
Now, another thing I need to tell you. That is, impulse wave is greater in length than corrective wave. Got it?
Yeah.
the length of this one, impulse wave, is greater than this. Example, if we measure the length, okay? If I measure the length here, the distance here was 6208 points, okay? And if I measure the distance of this one, it was 55 points. Can you see? Sorry, 165 points. This is 208. This is this one. So you can see if I go down, you see the distance here, 342 points. Can you see? 342 px points. So
Okay.
the impulse wave is greater in length than the corrective wave. Similarly, if we have a uptrend, now this is uptrend. This wave is what? Impulse or corrective?
Corrective.
This is impulse. But hold on. Hello?
Yep.
Okay. As I told you, this is uptrend because we have a swing high and swing higher swing highs and higher swing lows. You can see, right? Higher swing lows, higher swing highs. So this is uptrend. So I told you impulse wave is a wave that is in the direction of uptrend. So this upward, because this is an uptrend, so this one is impulse wave, okay? And this one is corrective wave, this red one, okay? This one is impulse wave, and this one, red one is corrective wave. Okay, now you can see impulse wave, the length of the impulse wave is greater, 198. This one, 116. This one, 190 points. This one, you can see 89 points. So impulse wave has the greater length than the this one. Do you understand?
Yep.
Okay, a very simple one. If I just give you a very quick review of impulse wave here, but here, if we have a range, here we have impulse. You can see this is impulse. Now we don't have an impulse because we don't have a direction. This range does not have impulse or corrective wave. Now we can say that in a range, impulse is equals to corrective. All right, because there is no corrective and no impulse, there is no direction, so we cannot identify impulse. Understand?
Yep.
Okay, so example, if an uptrend here, this is uptrend, remember that in an uptrend, this is what? This is what? This one, this one, this one, this is what? This is impulse wave. All right, this is impulse. And this one here, this small wave down, this again the trend is known as corrective. In a downtrend, okay, this one. What is this one? This one. This
Impulse.
one. This is impulse. Why? Because it is in the direction of trend. And I told you one more thing. Impulse wave is in the direction of the trend. Corrective wave is against the direction of trend. Second thing, impulse wave is greater in length than the corrective wave. All right.
Yep.
Okay. And one more thing. When corrective wave becomes larger than impulse wave, we call it as reversal, trend reversal. Understand? Very simple definition.
Okay.
I think now you can understand what does it mean. All right. Now similarly, as you see that this is impulse wave, and it becomes deeper than this impulse wave. This corrective wave. This is reversal. Understand? This one here, it becomes deeper than this one, impulse wave. This is reversal. Got it?
Got it.
Now if you just go here and see the screen, I will show you the reversal. Now you see, we have impulse wave, corrective wave, but see this one. See this one. See, and this is what? This is impulse wave. So you see, corrective wave becomes larger than then the impulse wave, and it breaks the low of the previous impulse wave. We call it as a reversal. Can you see? This is reversal. The uptrend changed from, this is uptrend, and because of this larger corrective wave, the uptrend is changed into downtrend. Can you see? Here as well.
Yeah.
This is this one, impulse wave, and as you see, the impulse wave actually becomes greater than this one. This is last impulse wave, and this is impulse wave, this is corrective wave. The corrective wave becomes larger than this one. This is reversal. You see? Now you see here, this is uptrend here, and you see this one. This is impulse wave, corrective, impulse, and then you finally see this last move. What happens? The corrective wave becomes larger than the impulse wave. So this is reversal. Understand?
Yeah.
Yeah, this is how. Now we are done for the session now. All right, this is done. From tomorrow, we will do this 3-stage cycle, this 5-stage, constructing trend lines or trend lines, identifying supply and demand, identifying overbought, and reading volume histograms. Tomorrow, and then day after tomorrow, we will complete the rest. All right.
All right.
Okay, so the session is completed now. I will send you the recorded video. Okay, so let's end it.
Okay.
Okay, see you tomorrow, and do practice it. Okay.
All right. Yeah.
Okay, and meanwhile, I will also send you slides by like through WhatsApp. You can read it. I will tell you about. I will summarize everything highlighted in this 4 series. Okay, so you can just read it.
Okay.
And bye bye.
All right. All right. Thank you.